Hey everyone, you're listening to Tech and Savvy. I'm Emily.
And I'm April.
And today we're here with Ty Cooper, a crypto expert. And he's going to talk to us about what crypto is, what blockchain is, investing in crypto, and the future of cryptocurrencies. So let's get started. Hey, Ty.
Hello, Emily. Hello, April. Thank you for having me on your podcast today.
Yeah, thanks for
glad to have
joining.
you.
And I know we
Yes.
already commented on this, but we love your Bitcoin in the background.
Oh, yeah. It's crypto painting. Been getting very in depth into acquiring cryptocurrency art. It's in a sense capturing the moment of these times, just like Leonardo da Vinci essentially was a painter for his time. That's basically the same ideas that I have for collecting paintings and creating some myself. So, absolutely.
Yeah, that's awesome. And so you're very interested in crypto, obviously. Do you want to talk a little bit
Right.
about how you got interested initially in crypto?
Yeah, so my very first introduction to cryptocurrency was actually back in 2012, where a friend of mine had essentially told me about this digital internet currency and how it was going to be used to transact between person to person without intermediary bank or like government getting involved. I was 12 at the time, so one, I wasn't really financially savvy at the time, and I thought this was some far off technology that didn't even exist yet. But come to I find out around 4 years later, in my senior year of high school, there was a presentation that a friend of mine had did on cryptocurrency. So this class I was in, it was AP Computer Science, and we had to make a presentation about emerging technologies. So he did his on Bitcoin at the time. No, this was early 2016, so no one knew what cryptocurrency even was. And so he had made this presentation showing how Bitcoin went from $70 to $140, and at the time Bitcoin was around $1,000. So that was my I said that moment was the first time I got deeper into the space, and so I started studying, looking at different resources that were available out there. Wasn't really as much as there are now, but that's essentially how I got started in learning about crypto. And then since then, over next year, right after I was graduating, I still did some studying. And when I worked my first job at a landscaping company, we were talking about how to invest. And so all these people, my coworkers at the time, they were saying, "Oh yeah, we're going to invest in Tesla stock. We're going to invest in Amazon stock." And I said, "Hey, I'm going to invest in this new emerging cryptocurrency, Bitcoins." And Bitcoin was like $2,000 at the time, and that's how I got started into cryptocurrency.
Wow, so you were a very early adopter then.
Yes, very early, especially for my age at the time. So yeah, I got in very early.
Yeah, that's very impressive. I'm still just getting into crypto. My knowledge is very limited, so
Yeah, I feel
Don't
like
worry.
I didn't really know anything about crypto until like last year, I think when Bitcoin really started blowing up again, when it got to like
Mhm.
$7,000 or something like that last year. That's when I was like, "Oh wow. What's going
Oh,
on here?"
oh yeah, because when like after the pandemic, or even a couple years before, we was trying to figure out how Bitcoin would react in a recession-based market, and so when it had plunged down to 5,000, people were saying, "Oh, Bitcoin is just going to be just as manipulated or affected as stocks," but it ultimately persevered. But later last year.
for sure. And so now you've made a career. A lot of it has to do with crypto. Can you talk about what you do?
Right. So in terms of cryptocurrency, what I first got into it as something that I do full time. What first thing was to create little infographics on Instagram. So I went to a networking meeting here in my local town of local entrepreneurs, and so we were talking about what it is that everyone does. And so at the time, I didn't really have anything. I was going to college for originally film at the time, and one of my friends told, well, now I'm a good friend, but the guy who I met, he had said, "Hey, you look into doing Instagram marketing, like posting infographics on Instagram." And so that's how I started my crypto priest page back in 2018. And so I didn't really have any clear direction for it. I was just posting cryptocurrency infographics that I made in my knowledge around the crypto space. And from there, I started to learn deeper about the space. And one of the things that really got me started was selling Bitcoin through a peer-to-peer market, because thinking about cryptocurrency, you can only buy it from someone who already has it. So I used to go on this website called Paxful and have orders for sale for Bitcoin. So that's kind of how I got made first money in crypto. And then from there, it expanded into me doing consulting for helping other people get on to what I was doing. And then I thus then proceeded to build crypto based apps. So my very first startup was called Streamline, which was going to be a marketplace where you can buy and sell products utilizing cryptocurrencies. I don't really talk about it much now because it didn't really go anywhere, but I learned a lot with it. And the code
How old
base
were
I had
you?
built for it, you said what?
How old were you when you had that first startup?
Eight. Well, I was 18 when I first came up with the idea. I was 19 when I first implemented
Oh, that's amazing.
it. Yeah. I had because I didn't really have any clear direction. I was just testing different stuff out, and with the startup, I was going to. I had big goals for it, but ultimately it just didn't work out. And so ultimately, what happened was when I couldn't sufficely do what I needed to do with it, I just sold off pieces of the code to other people to other developers who needed a subset of what I was building and implement it into their own apps and projects. And I started getting money from that, and then I started doing freelance work. That's what I mainly do full time as my front thing. But now I'm transitioning from the freelance space to doing more of establishing businesses and providing a lot of cryptocurrency applications again.
That's awesome. And this is your full-time job, right? It is consulting, it is crypto.
Mhm.
That's really awesome.
Yes, it is. Between consulting, trading, and developing, those are my triangle of things I do.
Great. I think we're all very interested then in how to get into crypto, but I do want to start with just some of the basics. So, Ty, could you just tell us briefly, like, what is blockchain?
If anyone goes on Google, the very first thing that's going to pop up is a distributed ledger. Um, for my explanation, I like to give to new people for them to understand it easily is a book of receipts that everyone has a copy of that is agreed upon by validators or miners. So what the blockchain is, it is a distributed ledger that every block in the chain is dependent on the block that came before it. And the transactions are encrypted graphically hashed, meaning the information is encrypted. So the address that you have on the blockchain, that is your unique identifier for interacting with the blockchain. So what you would do is on a blockchain, the big appeal about it is that no one has complete control over it, unlike you do with a bank or a database that is usually stored on a central server somewhere. So it's operated by everybody who uses the network. So if you make a transaction from one person to another, then that accounts as a transaction. And a block you can think of as a list of transactions that thus gets approved by the miners on the network. So miners are people who have just a computer running to process these in cryptographically hashed algorithms, because there's a lot of math based involved. So once these miners append the new block to the network, they get rewarded for the essentially the work, which is called proof of work algorithm. That's just one of the different consensus algorithms, but that's the most common one that Bitcoin and Ethereum uses right now, and that's essentially what keeps the network running in terms of blockchain technology.
Yeah, so it's a distributed ledger, and essentially it's a series of blocks that are chained together with cryptographic hashes, as you
Right.
mentioned. It is a powerful technology to be able to have this like distributed storage, essentially,
Yes, absolutely.
but
And
not for everything.
right, you can't. But at the end of the day, it's a ledger system, so any type of record keeping aspects that would usually be controlled by big data companies, the blockchain is seeks to be there to, I wouldn't say replace in a way replace it, but replace majority of aspects that people find that have difficulty of dealing with.
Okay, so now let's get into our very specific use case that we're excited about, crypto.
Mhm.
Can you just describe what crypto or cryptocurrency is?
Right. So cryptocurrency is a digital. There's going to be different, how you say, definitions that every government or people tell you, but at the end of the day, it's in a sense used as in cryptographic uh, incentive for people to utilize the blockchain. So for miners, they get the first minted coins usually, or validators depending on the consensus algorithm, and the cryptocurrency is essentially the tool or the tokens that are used to keep the economy of the blockchain flowing. So just how we use dollars today, and back then they used to barter with beans and uh, tulips and things of that sort. Cryptocurrency is that new uh, system that is going to be utilized in not only the financial world but even things beyond that, because there's so many things you can do with cryptocurrency. It just runs through my mind like rapidly right now. But yeah, but that's basically what cryptocurrency is, and with itself the tool utilized to process data. Well, not process data, but to incentivize utilizing the blockchain.
Interesting. Okay. So we use cryptocurrency to keep the economy of the blockchain going. And so how is that crypto created? Like how do I get a Bitcoin? Like how is that made?
Right. So cryptocurrency is set by the creator of the blockchain. So I used Satoshi Nakamoto for very first example. He set the number to be 21 million bitcoins for I don't know why, and every and Bitcoin gets distributed into the network by miners. So back in the day, anybody could just mine Bitcoin on their laptop. I mean, you still can, but mining is almost a the more the more computing power you have for your mining, more higher chance that you have to essentially get a Bitcoin. And every new block that gets mined, a new cryptocurrency gets entered to the market. Now that's the proof of work algorithm. Next one is the proof of stake, where the cryptocurrency that you get usually by airdropped or by you buying it with another cryptocurrency, you utilize that stake to process to be your research and processing the validation, opposed to using computing power, which in a sense is bad for the environment.
Right. Okay. So whoever creates the blockchain dictates how much of a particular cryptocurrency can be used within that particular blockchain, and that coin is either created through through like your computer power. So you need it's with like Bitcoin, you need a lot of computer power in order to actually create that coin through the
You will
blockchain.
need right, and the reason why you would need a lot is just because there's a lot of miners on the network, so it's a self-balancing system. Uh, Back in the day when there wasn't as many miners, you wouldn't need as much computing power. But now you need essentially servers and uh, computation power to the size of an entire football field for you to even be profitable in mining. And this is also what adds into the value of cryptocurrency and furthermore increasing the value of Bitcoin and crypto as well. The very first Bitcoin transaction outside of being a gift to someone was someone had needed to when he was using his computing power to mine Bitcoin, he had noticed that he had a significant charge in his bill. This was back in 2010, I believe, and he had sold some Bitcoin on an exchange. It was 5,000 Bitcoins worth was around $5.01 at the time. So around today's prices, that 5,000 Bitcoin he sold for he sold for $5 is now worth a quarter of $1 billion. So as mining became more expensive, so that kind of got reflected into the price of Bitcoin as well.
That was something else I wanted to ask. So, are you saying that crypto gets its value based off of how expensive it is to mine it?
Well, I say that's how it first got started with its value because there was being a real world resource being utilized in order to process Bitcoin. But now it's becoming a little bit beyond just the simple mining. It's now people are starting to invest in it, so there's external money being pumped into the market, and then you also have derivatives and different future options being tied to this asset as well. Therefore, the value of Bitcoin and other cryptocurrencies doesn't derive solely from mining anymore, but it is mining has just been the overarching uh, insignia for his overall value, which is why that's something that a lot of crypto data analysts takes into account when it comes into predicting future prices of Bitcoin. But that's how it got started. And then as people furthermore invested into Bitcoin and cryptocurrencies, uh, the market cap of its total value also um, became not just reliant on mining.
Yeah, that makes sense. So previously it was the expense of mining, but now it has to do with a lot more factors, including like institutional investment and just general
Mhm.
public interest in the
Absolutely.
currency. All right. And can you kind of give us some maybe misconceptions about cryptocurrencies? Like, are cryptocurrencies stock in a way, or are they entirely different?
See, that's a really good question because it really comes down to the country. Not even the governments really know how to uh, identify cryptocurrency. See, here in the U.S., it's considered a security, where over there, as France, is usually considered more as a utility. So there's going to be a lot of international laws that come into play in deciding what it actually is, and because the reason I say that's important is because it's going to be the civilians that are going to be the most impacted. So one of the biggest use case that when people see crypto is that, oh, I don't have enough money to buy a full Bitcoin. So that's one of the biggest misconceptions because you can buy fractions of crypto all the way down to, well, for Bitcoin you can buy a fraction of it all the way down to the eighth decimal place. And two, as much as the institutionalized financial markets wants to consider Bitcoin just on the same level as stocks, that's not really accurate because there's a whole aspect of the medium of exchange portion of it that's not really considered to a lot of media analysts. And most people do come into the crypto space to see it as an investment to invest and get rich off of, but that is not necessarily the case. Even though it does happen, I'm not going to say here and say it doesn't happen because it happens all the time. It's just the likelihood isn't something that I feel a lot of people really grasp because they say, "Oh," even when I tell people like, "Yeah, I invest in Bitcoin," they say, "Oh, you must be stacking." I mean, I don't know how to really answer them directly when they ask that because I don't want to give off the impression that it is a quick get rich quick scheme because it's not. There's a lot of foundational aspects in that comes a part of cryptocurrency that a lot of people miss. So those are some big misconceptions people have. And another interesting one is people say that it is still being used for criminal activity for like money laundering. I wouldn't necessarily that's a misconception because that's how it did get started in terms of being popular. But it's almost in the same way of oh, I don't want to use cash because that's what drug dealers use. I mean, it's just they're always going to find a different tool. Whether it could be sticky notes, and they price I don't know color sticky notes, for example. That's what you're going to ban sticky notes. So criminals are always going to find some type of way to exchange their illegal dealings. That's whether it be cash, peanuts, or crypto. They're always going to find some way to do it.
So you would say the biggest misconceptions about crypto are first that really countries don't know whether to categorize it as a security, as a utility, or, anything like that. It's not necessarily a stock, but
Mhm.
it, it could be a stock in some other places. The other misconception, like you mentioned, is you don't have to buy a whole Bitcoin. You don't have to buy a whole, just one whole cryptocurrency. You can do fractional shares.
Right.
Uh, Buying crypto is not, it's not a pyramid scheme. It's not a get rich quick scheme. You're not going to become a billionaire or millionaire investing in crypto. Although some people have, it's not,
Right.
it's like anything else you invest in. You're not going to get rich right away.
Yeah, I definitely say it's possible, just not very. It's not as probable as people think. There's a lot of different aspects involved with that.
Right. And then you said the last thing you mentioned is it's, it's not only used on the dark web, it's not only going to be used for criminal activity.
Right.
Criminals will find anything to, exchange money and stuff like that. So,
Exactly.
So thanks, Ty, for giving that overview of what crypto and blockchain is. So even though it's not a get rich quick scheme, you can make money off of crypto, and a lot of people do.
Right.
Investing in crypto is very popular.
Absolutely. It's popular just in the same way that Robinhood is also popular. It demo, ah, democratizes how Robinhood democratized investing in stocks. Cryptocurrency kind of has been this new wavy trend of investing that's not tied to a certain predictable hand controlled market by the same 5, 10 sets of people. It's it's like new. It's a wild west almost in a sense.
Yeah, and a lot of companies are even starting to accept crypto. So clearly it's becoming really popular and a good investment. But I think it used to be, it used to be that there was just Bitcoin and then I think Ethereum. So there was just a few cryptos out there. But now I think there's hundreds, maybe thousands. There's so many out there. So as someone
Yes.
just getting started in crypto, I think it's hard to decide, which crypto to buy and how. So I wanted to talk more about investing in crypto. So
Okay. Absolutely.
this is a very broad question, but what should you look for when you're choosing which crypto to invest in?
So there's a I actually have a sheet of this on my that I post on my Instagram that I use when I want to analyze certain cryptocurrencies. Um, I can't remember off the top of my head, but there's 8 elements. Well, realistically, 10 elements that I look for. The very first one is market cap. How much total market cap that it has, meaning all the different values, assets that are tied to it, and that's important because you want to see the ranking of that cryptocurrency, uh, which is why a lot of people flock to this. same top 10 because they're in the top 10 for a reason. Those are the ones that are highly popular, have the most assets tied to them. And then the second thing I look for is the accessibility. Where can you find it? Because accessibility is key, especially for who want to get new into the space. So someone like me, I can get access to cryptocurrency that no one even heard about just because I have those type of connections and access. But for the average person, they're not going to be that depth in the space. So places like Coinbase, Kraken, Gemini, Celsius, or even PayPal and Cash App, for example, allowing people to buy cryptocurrencies directly from their debit cards or bank accounts, is ex- a very huge advantage for that particular crypto project.
So to clarify, so you mentioned the market cap and then you said accessibility. So where you can actually buy that coin, and the more accessible it is, the better, right? So you want to look for a crypto that's very accessible. Is that true?
In a sense, it just the accessibility reaffirms the project's success, basically. Um, for example, there's Binance.com. You can get Binance US, but Binance US only has, I think, around top of my head, like 20 or 30 coins. Whereas people here in the US are going to be more familiar with Coinbase or Gemini or even Robinhood. But thing with a place like Robinhood, they don't actually give you the accessibility to send it to another wallet. You're just trading off the value, which for someone who's a hardcore crypto is not something that I find useful. But for some people who just want to make the money in crypto, that might be something they appeal to. And then some other aspects of crypto that I like to look into is what's the project's doing, because if it's a good project, then that means overall it's going to be pretty significant. But I say that, and now there are some scams and there are dangers in the crypto space that you can't really look off the project alone. Or I wouldn't say, well, yeah, some of them are just straight up scams, and those are pretty clear as day to find sometimes. But sometimes they can look a little bit too legit. So if you aren't someone who can really scan those, but a lot of people aren't going to encounter those. If you go through a centralized exchange, there's a rigorous process for those cryptocurrencies to be even listed on those exchanges. But there are some coins out there where projects does matter.
And a couple other things you had mentioned to me. You talked about how many tokens are available, and is it a fixed or variable supply? Is that something that people should look out for?
Yes, absolutely. Because prices can be deceiving sometimes, and I say that because, for example, if there's a coin that just released and it shot from $1 to $10, but if there's only a million out of the billion coins they have, the market cap only goes by what's in circulation, not the total amount that exists for that particular project. So for cryptocurrency, you want to look at the circulating supply, because if the circulating supply is low and it has a high price, then there's going to be something that's going to happen where the value of this coin is going to uh, increase or decrease just by if the project wants to release more coins into the market. This is what happened with sushi, where sushi's a coin. It had went from, I think, like $1 to up to $10 the first time, and then the CEO of the project had dropped a significant amount of sushi in the market, plummeting the price, almost in a way how inflation does when there's more dollars pumped into the economy. Same concept. So looking at whether it's a fixed or variable is really important. Now, it also goes beyond that into looking at what is the use case of the coin. So something like Bitcoin, it makes sense to have a fixed supply because Bitcoin is seen as a digital gold. Uh, is is actually more unique than gold in some aspects. Whereas a coin that is a synthetic token, which needs to be 1 to 1 to a certain price, it's kind of hard for that to have a fixed variable, because you need to pump some more into the market, or you need to burn or dump some of those tokens out just to keep up with a certain value that you're trying to match one to one with.
Okay, so some crypto is like a resource, it has a fixed supply, like gold you mentioned in a sense. And some crypto is more like our actual dollars where, they can just keep making more. And so that's something that's important to look at when
Mhm.
investing. And you also mentioned that you want to make sure it's not a scam. One thing I've heard is, you know, Bitcoin, obviously, the creator is anonymous, but I heard that in general, you don't want the creator of the crypto to be anonymous. Would you agree?
Yes, I would. Just because now it well, it really depends because Satoshi Nakamoto, uh, right? No one knows who he, she, or they are. It could be an alien for all we know. But that was essentially unique because one, that person was the first to essentially create this new innovative tech, and for something to be this disruptive to even the higher echelons of the financial world, like we're talking big banks, big corporations, big government, they there's some theories out there that says that Satoshi Nakamoto is dead, but since he she or whoever they were led the way into creating crypto, it made it kind of made this new standard for subsequent founders to be well known, because you don't want this project you're investing in to be a pump and dump, because that's what happened all the time. Because if it was, then finding that person will be a lot easier, and so that person has their name on the line, and you can feel a little bit safer about that. So
Right. That makes sense. It's a little bit more assurance that it's not a scam.
Mhm.
Yeah. Okay. So one more question I have about investing. Well, I have a lot of questions, but one
Yeah,
more
yeah.
to get to that I think is interesting. So Bitcoin uses proof of work, right?
Right.
And that's just the consensus algorithm.
Mhm.
And there's a lot of different consensus algorithms that have come out. And proof of work, for example, is not good for the environment. It's very
Right.
resource intensive. So there's a lot of others like proof of capacity. So
Mhm.
is that something people should look for when investing as well? Like what consensus algorithm, how the environmental impact of it?
Proof of work is damaging to the environment, as you say, but it also drives the initiative for greener solutions. So on one end, yeah, it's hurting the environment now because, well, using infrastructure that was built, can't keep up with high energy demand, while at the same time there are being new resources out there like proof of capacity, proof of stake, two other important ones, or delegated proof of stake, which is like proof of stake but in a delegated aspects, that are being built to try to, well, compensate for this current inefficient system that it's had, but it's almost just being damaged by its own success. So the reason we got to this point with in the crypto space is because it's been so successful, which is a good thing. But there's also a trade off, and it's utilizing off the backs of an inefficient infrastructure that wasn't capable to handle high intensity demand like this.
All right, so you talked about some of the things to consider when investing in crypto. So if you're really going to get into it, there's a lot to consider and probably even more than this. But some of the things that you talked about were, what blockchain is it on? What is the market cap? How accessible is it? How
Mhm.
many tokens are available, and whether it's a fixed or variable supply, and potentially looking at the environmental impact if that's something that you think will affect the project. Um, it's not necessarily going to make or break the crypto, but it's definitely something to consider.
Right.
So it sounds like there is a lot to think about it. Would you recommend that somebody, learn a lot before investing, or do you think it's okay to kind of jump in? Like, what is your feeling about that?
Oh no, for me personally, I would not recommend someone just throwing money at something they don't necessarily understand, even though it is something that has, well, it's just something that people are going to do, and it's something that a lot of investors get excited for because, like, hey, a lot of people are investing in this one project. We're going to ride off the backs of it. But for someone who wants to actually utilize it as a investment tool into their portfolio, I would recommend any person to start with education first, because you'll come at a you'll have a stronger understanding of not only the space but how what projects to invest in, how to utilize your money to your best possible capacity, opposed to listening to someone on YouTube say, "Oh, this coin is going to $400,000 today or something like that, or this year." So it's better to get the education, like on sources, for example, Coin Market Cap is a great analytical tool. Uh, Coin Telegraph is also great. News Source that and Decrypt and another very valuable resource that I recommend people getting started with if they want to learn about investing in crypto is going on crypto Twitter and Reddit. So some of the crypto subreddits, those are fantastic tools to get in and ask questions and essentially learn, because crypto is a community based driven investment ecosystem. So the best place to learn about it are people who not only creating it, but people who are investing in full time, like myself. So definitely recommend getting the education first, then investing into it.
That's good to know. So I shouldn't just buy Dogecoin because someone said, "Hey, buy this coin."
It's actually funny you brought up Dogecoin, because the SEC, they were going to go after Elon. Well, they gone after Elon Musk in the past for his antics on Twitter in relation to the stock market. But since what he did pumping Dogecoin, they don't really know how to go after him because they can't. The SEC doesn't regulate the crypto market because it's a decentralized global market. It's not really cornered by or even regulated for that moment, in that aspect like the stock market is. So well, I don't know what's going to happen, but that's what some rumors I heard about it. So no, you shouldn't just get in on crypto just because someone tells you. I'd rather people make informed decisions than to just toss money left and right.
So would it be safe to say that Dogecoin probably isn't your favorite crypto? Do you have a
No,
favorite?
it's kind of hard to say that because because I've been in this space so long. I like all these different projects, and I actually talked to founders and devs of these different projects, so it's kind of like asking a parent who their favorite child is almost. I mean, there are some projects I don't like, and Dogecoin is one, but not necessarily anything related to Doge. It's just the whole media aspect prepping Dogecoin up as a valued coin, and there's a couple other ones that I always felt iffy about. But as far as coins, I do like. It's just a tough choice, but I would say projects that I feel strong that would go far. Obviously, Bitcoin, Ethereum, and Chainlink are good ones that I know will go far. But anything related to DeFi, which is decentralized finance, and anything related to NFTs or non-fungible tokens are coins I'm very excited about.
So what you're saying is you like all the coins, at least the ones that are associated with good
Right,
projects. You
right.
like the
Those
ones
are
that are
good
associated with
projects.
good projects. You don't want to choose a favorite, you know.
I really don't, because there's just so many cool cryptocurrencies out there that I want to grab them all. I want to, even the ones I don't like, I still want to hold on a couple of them just in case Elon Musk makes a tweet that says, "Hey, invest in this other coin." And I was like, all right, well, I'll just hold on to it just in case.
Right. And so you said some projects that you thought had like good long-term potential are, obviously Bitcoin, Ethereum, and Chainlink.
Hmm.
And then any coins or tokens in the future that, have a focus on DeFi or NFTs are projects you're getting really excited about, or that's what's
Yeah,
making you really
absolutely.
excited.
Yeah, absolutely.
Kind of like when Emily was talking about, how do you choose a crypto to invest? Once you've gone through the process and you've done all your research, how do you actually buy, your token? Do you just, I mean, do you just buy it on a trading platform? Is it peer to peer most of the time, or is it better to do it on a crypto specific platform?
Mm, I'd say it really depends on the person and how deep they are in the space. For the average person going, it won't hurt just to get some on Coinbase or uh, Gemini or Celsius for that matter, just because those are platforms built for onboarding people into crypto. So those are great platforms for a lot of people to proceed to buy cryptocurrency on. And the reason why is one, they aren't they make it easy as pie for the person to invest in. So that is a great reason as to why. And the second thing is, if anything goes bad, you can knock on somebody, you can knock on their door, you can file some suits against them, be like, "Hey, what's going on with my money?" So that's one of the for new people is one of the great aspects I say to buy from. But for people who want to go deeper in the space, like a lot of people who are devs or DeFi investors like myself, we like to use decentralized exchanges. So decentralized exchanges are, I like to call them automated peer-to-peer platforms, because one of the things with exchanges is comes down to the liquidity aspects of it. So, f like I said back in previous, you can only buy crypto from someone who already has it, and usually these big exchanges make partnerships with miners and validators to buy a huge chunk of cryptocurrency from these miners and these projects, just so they can have an ample supply of it to sell off to people or to receive some based off of that. But for decentralized exchanges, uh, everybody who is a banker provides that liquidity for the networks. And just to not get too much off topic, but what decentralized exchanges allow is for anybody to be that liquidity provider. And once you provide that liquidity into the network, you essentially get paid off of it.
Okay. So if you're a beginner, these crypto platforms like Coinbase are really good for you to start getting your feet wet if you
Mm-hmm.
want to buy coins. But as you go deeper and as you want to become a more serious crypto investor, you probably want to get on a decentralized exchange
Right.
because that gives you more liquidity and you have a lot more freedom when it comes to exchanging tokens with other crypto investors.
Exactly. Absolutely. And some good decentralized exchanges are Uniswap and Sushi and Kyber, for that example, too.
And so once you've bought your crypto, where is it stored? Like I've heard some people use terms like a cold wallet
Mhm.
for like storing crypto. So how exactly is your crypto stored for you, or how do you store it?
So that's actually a good question. I, I should have said that as far as misconceptions for crypto. Cryptocurrencies, the actual tokens themselves aren't technically stored, right? Um, they what happens is once the blockchain is created, there's a set amount of coins, or right, there's a set amount of coins that gets created, and then you can trace it through the blockchain. So once a coin gets sent to an address, all the blockchain is a signature saying this address owns X amount of coins. So what's really stored technically is the private key. So the cold wallet is essentially a wallet that's not connected to the internet anyway, shape, or form. So these are going to be your Ledger Nano S's, your paper wallets, which are my personal favorite, or your Treasure wallets. And then you also have hot wallets like MetaMask or Exodus that are connected to the internet. So, and so you use this private key to get access to your cryptocurrency through a wallet. So a wallet is just, we'll just have a list of addresses, and those addresses are going to have a public key and private key encryption pair where you use the private key in order to access the cryptocurrencies.
So, like you said, crypto isn't actually stored like you would store like a dollar in your wallet or anything like that. They're stored in these things called wallets, which can be hot or cold. Hot wallets are
Mhm.
connected to the internet, cold wallets aren't connected to the internet. And the way you access your tokens on these wallets They need to be decrypted in order for you to access them. So you have a private key, which you would then use to decrypt your crypto on that
Mhm.
wallet.
Right, and you also use assign transactions too. Absolutely.
Gotcha. Okay, so I bought my crypto, I've stored my crypto. So what can I spend my crypto on these days? Like, can I buy stuff with crypto, like tangible things?
You actually can. It really depends on a business by business basis. But I can tell you the most common thing crypto is spent on, it's other cryptocurrencies. So people use crypto to buy other crypto. Back during the dark web, it was used for illegal activities. But nowadays, most of the crypto is being spent on either buying more crypto or utilizing it to buy what are called non-fungible tokens, which has been this new trend in terms of digital ownership. And that's something that people spend money on using crypto, at least here in the US, because with the US, cryptocurrency is considered a property. Whereas if you use it to send or sell it, you will get hit with certain tax liabilities with it. So that's why a lot of people, at least here in the US, utilize crypto to buy and hold. But you can definitely buy crypto certain things, but it just really depends on the business by business basis if they accept it or not.
Okay, so it just depends on the business and whether they accept it. And outside of that, typically you're just using crypto to buy other cryptos or non fungible
Tokens,
tokens.
yeah.
Wasn't Tesla gonna let you buy cars with crypto or with Bitcoin?
Yeah, yeah. See, that's an example of a business where you can buy. I know Lamborghini was the first car company to actually allow people to buy Bitcoin. Well, buy Lamborghinis with Bitcoin, and Tesla is seeking to do that as well. That's why they bought $1.5 billion worth of Bitcoin, because they're going to probably roll out some type of cryptocurrency service that they haven't already.
And so now that we know how to buy, we know how to store crypto, and we know what we can spend it on, are there any risks that people who are investing or buying cryptocurrency should be aware of?
Whew, there's a lot. Everything going from false websites, misspelled websites that pretend to be the actual project website. There's things like um, sending it to the wrong address by accident because we're not at the stage where we can use encrypted usernames like Cash App does. So we gotta copy and paste that long address, and you just misspell one thing, your crypto can go to the wrong wallet. So you want to double check that. There's also some scams and just traditional scams like phishing scams. You want to be careful what you download on your computer, like malware and things of that sort. There's different coins that might look legitimate and be a legitimate project, but it could be a big pump and dump scheme, which is why looking at the circulating supply is very important in the coin listing, the project listing. And one of my actually, I have a personal experience about a big risk that I took in crypto that was very expensive on my aspect. Was I actually got hacked in in this crypto space. So I'll explain how it happened. So I was participating in a hackathon where you have to build a DeFi project in a month. And so I had built it. My project wasn't fancy or anything like that. It was basically uh, a watered down version of a portfolio tracker for your crypto. And so once I had put this code onto GitHub, one thing I forgot was to ignore my .env file, and the .env file is essentially a bunch of credentials that you need to keep secured that you use on your local machine, but not when you push it to GitHub. And so I had pushed it to GitHub, and one thing I didn't realize was that I had needed to make the project public and for them to check it. I thought I had to invite them as a collaborator because it was private. So I had pushed it public, the GitHub, and one of the embarrassing things was, so after I pushed the project to GitHub and I was recording this video, and so I was getting these alerts saying, "Hey, money's being sent out your wallet. Money's being sent out of your wallet." And so I was like, "Wait, that doesn't make sense. Why is this money just leaving my wallet?" And I'm gonna have to create this video, and I'm over here shaking to death, losing money. And so I checked back in my wallet. I had around $2,000-3,000 into it, and the overall portfolio of the wallet, and the hacker had took $1,200. So basically, my stimulus check, because I had bought crypto using my stimulus check, and then I had invested it in crypto, and they took that. But I was more impressed on how they actually did it. How they did it was there was a bot that was checking for mnemonic phrases. I didn't even have my private key. I had the mnemonic phrase of the coin of my wallet because I needed the wallet to be connected to the app in order uh for it to do what it needs to do. So the bot somehow put together this 24 phrase word and got access to not only my main wallet but all the other addresses I had connected to that wallet. But fortunately, I was able to get some of it back a couple months later because some of the money was locked in this DeFi protocol, which had debt tied to it, and you can't get that money back unless you pay that debt. And so the hacker couldn't pay the debt back, and so I had put together basically a smart contract, which is code on the blockchain, in order to swiftly pay off that debt and send those coins back to another wallet. But yeah,
Wow.
What a
yeah.
story.
Right.
Right
I feel
now,
like
that money is around $7,000 right now after appreciation.
So you pushed your credentials for your wallet to public GitHub accidentally, and in
Yes.
just under, like, 2 minutes, someone swept in and started spending your Bitcoin or
Y-
your crypto?
You're right. Yeah.
That's crazy. So they're just bots just trying to wait for this to happen.
Right.
exactly.
Because I was just so impressed. I was like, I want to see this guy's setup. Like, how do you just set up a bot just to scan? Keep in mind, all of GitHub, right, for a 12 or 24 random seed phrase to access a random wallet. So then I got to thinking in my mind. I said, so someone could put together a random 12 to 24 phrase and somehow end up finding a wallet. I mean, chances that they find any wallet will be very slim, but let alone finding a wallet that has money in it is even slimmer.
Okay. So I think that brings us to the end of this investing in crypto segment. And now we can move on to our next segment, which is talking about the future of cryptocurrency. And I know, Emily, you wanted to talk a bit about how quantum computing affects crypto.
Yes, I think it's an important topic when thinking about the future of crypto, and I'm in quantum computing, and I get asked this a lot, like, "Is quantum computing gonna break crypto?" So, it's a large topic, but very briefly, the first question is about, like, will a quantum computer be able to mine better? Will it be able to break the hash that, chains these blocks together? And the short answer is no for that. Right now, it doesn't seem like quantum computers can do that better than classical. So the actual structure of blockchain and of crypto isn't really at risk. The part that's at risk, which we kind of Ty, you mentioned earlier, is the actual signature that is what keeps is what tells who owns the coin. Bitcoin uses the elliptic curve digital signature. And so basically you sign with your private key and then you verify with the public key. And this relies on the security that given the public key, it's very hard to find the private key. And that's true for classical computers. The problem is there's a quantum algorithm that can actually break this, it can, given the public key, it can find the private key. So we have this algorithm. We don't yet have the hardware to run it on. And when that will be, it's really hard to know, maybe in 5 to 10 years. It could be very soon, though. But once we have that, it will be able to break this digital signature. So there are some safeguards against this. I believe that, and Ty, you can correct me, that your public key generally isn't shown. It's double hashed. So the public key is only shown during transactions. And after a transaction, you can just switch the key pair. So this means that quantum computers would have to be able to break it very quickly. So this limits the scope of the attack. But of course, there could be other workarounds. In general, you don't want to rely on that. You really want your crypto to be secure. So probably what will happen is in the next few years, crypto will, have a fork and they will start using quantum secure cryptography. And if you're interested in that, you can look up NIST, post quantum cryptography, and learn about those algorithms.
Wow. That's pretty um em- empowering to say the least, or reassuring for a lot of crypto based projects, because a lot of blockchains that are out there now aren't really quantum secured. And there was one particular project, quantum resistant ledgers. So I feel as quantum computing from my understanding, is as it begins to becomes more sophisticated in a way, be able to build out a quantum computer hardware that can break these certain encryptions. One, I feel like you're gonna have a lot more issues than worrying about just cryptocurrencies in that regards. Um, but I do say, for from what I speak to different people involved with crypto, they're already working on building out quantum resistant ledgers, which would be resistant to quantum computing algorithms, or even run off the backs of quantum computers to make it even more secure. So that's just one of the cool mini things in terms of the computer science side of things.
Nice. And thank you, Emily, for, kind of explaining, what effect quantum will have on crypto and how, these projects might be able to protect themselves in the future. And Ty, kind of to pivot a little bit, even though a lot of people are getting into crypto these days, a lot of people also feel like they kind of missed the wave, with Bitcoin. So do you have, do you have any advice for people, or do you know, is there another wave coming that, people should be aware of?
I mean, there's always going to be new trendy waves that's going to happen in crypto space. It's always a matter of when it will happen. People will say, even tell me like, "Oh man, I missed the Dogecoin wave," or "I missed the DeFi wave." I wouldn't really say it, because there's going to be a lot more opportunities to invest in. There's opportunities right now that people um, aren't knowing about, because, well, they haven't hit mainstream media, and just because they have doesn't mean you missed it entirely. A perfect example of this is the NFT market.
So you're saying like people should really start looking into NFTs. And can you give us kind of like a brief overview of what NFTs are for people who might not be familiar?
Right. So I made an infographic about this the other day. Whereas the blockchain is the res- distributed ledger of, I like to call it, book of receipts everyone has access to in this copy of. You can think of money on the blockchain being cryptocurrencies, DeFi being banking on the blockchain. NFTs are more products and collectibles on the blockchain. So you can buy an NFT utilizing cryptocurrency, and NFTs are unique digital ownerships of a particular product or collectible. So a painting, for example, which is on crypto would be digital art. There's a lot of digital art that has encapsulated the NFT market, right? So for the NFT market, it's unique digital hashes that are tied to different products. And people are buying these products for cheap and trying to flip them for even higher of a price. And so that's one of the main appeals of NFTs right now is that it's a unique digital hash. Like the tokens you have are unique. No one has that particular token. Whereas with Bitcoin, anybody can have Bitcoin, but Bitcoin's value is has a base market value at the time of whenever you buy it. Whereas NFTs, you set the value, or and it's kept. I won't say really kept in check like crypto is, but you could just set the value. So let's say a cup, for example, if someone wants to sell an NFT picture of a cup, and you sell it for $100, and then another person sells it for 1,000. That's just how it works. There's not going to be some immediate price points with that. Just like selling products, you know, Apple sells their iPhones for around $2,000, where LG might sell them for 500, and they might be basically the same phone, just different features. So there's different aspects to that. So that's what big appeal for NFTs comes from.
Okay, so NFTs are essential products and collectibles that you can sell on blockchain, and that they're bought with cryptocurrencies,
Mhm.
and they're digital, and the prices are kind of, you know, they're kind of deregulated. You like you said, Apple can charge $100 for their phone, and Samsung can charge like $2,000 for their phone. It's all about what people are willing to pay.
Exactly. Absolutely.
Okay.
And it's pictures online that people are buying. Is that
Yeah.
yeah?
Yeah. Yeah.
It's also foreign, such a foreign concept to me.
So people aren't necessarily buying the pictures themselves; they're buying the digital ownership to have that picture. Another example of this I can give is think of music. So you could stream Michael Jackson music all the live long day on Spotify, YouTube, and whatnot, right? But there's someone who owns the digital rights to all his music. So and now if that digital rights were an NFT, now it becomes valuable because then you could go and say, okay, now I could use this music. Now, if someone wants to use Michael Jackson music in the future, then they'll have to come to me because I own this. Now that's value, but it's the digital ownership people are buying it for.
Definitely sounds like that's a quickly emerging market that a lot of people are getting into, or at least people should be looking at for future investments.
Mm.
And then I had one more question I wanted to ask you about. Could you tell us a little bit about the decentralized stock exchange that you're building? Like, what does it mean for a stock exchange to be decentralized?
Right. So that is my secret, not so secret project. Um, yeah, it's a secret, not so secret project. So, but basically, it started being a 100 days of code challenge for me. And I didn't want to just build some type of calculator or build a bunch of different small projects because I was a little bit of an experienced developer at the time. So I wanted to do something, grand. I had started a project December 2019. I'll be honest, I gave up on it like midway through because I just got busy with other projects. And I said, I'll come back to this later. But here's the overall concept of it. So the decentralized stock exchange, it the overall grand vision of it is going to be where companies can just come be in a sense providers for the stocks, just like how people can be, provide cryptocurrencies on a different blockchain. Same thing for companies, and the stocks are going to be tokens. We're trying to figure out if they're going to be just uh, crypto tokens or are they going to be NFCs in a way where it's going to be issued like a share, and then these companies can issue X amount, and then we'll have to work with SEC on some things to get that physically registered, and then have that be in a sense processed into the blockchain on a digital level. Now we're considering utilizing the Polkadot or the Cardano or Avalanche blockchain just for their interoperability, meanings uh, they can they have the possibility to do cross chain transactions, meaning if you do one thing on one blockchain, then you can also resonate that same transaction on another blockchain, which makes all the blockchains start to become connected in that sense. So the consensus of it is to furthermore democratize the stock market, where people can buy stocks just as easy as they can buy cryptocurrencies.
Yeah, I think that's a really cool project. Kind of like you said, giving these companies like the autonomy to be the ones that are actually giving out the shares of their company, and it becomes much. It brings them and the customers slash shareholders much closer together, and also like you said, bringing together crypto and the stock exchange as as it becomes a greater means of investing and the way people pay for things. There will be a day that people are going to say, I want to buy stocks with Bitcoin, not
Mhm.
maybe not the other way around. So I think this is a really cool project.
Yeah,
And
yeah,
you mentioned the Robinhood incident too, and that got you a lot of buzz because
yeah.
people were obviously upset that Robinhood was preventing them from buying certain stocks. So this wouldn't be an issue here, right? There wouldn't be a third party regulating it. Is that true?
No, because it's going to be regulated by. So, how blockchains and decentralized applications work is that it's a multi-step layer. So, the way we envision is we're going to have a blockchain to be the base layer where the transactions get processed and you know um, recorded on. Then you have the cryptocurrency being the incentive. So it's going to be the incentives for the companies to get paid. It's going to be the incentive for the validators to validate the transactions, provide that computing power. And then we also going to have the users who are going to provide those currencies to stimulate the overarching economy to because they're going to be the ones that are going to buy and sell the shares of stocks. And then all that's going to happen autonomously throughout a smart contract, just like how apps are built off of scripts. But smart contracts are open source by default, so that way you can have outside audits on it. You can have people provide ideas for improvement protocols, and that's how blockchains get upgraded. They can either get upgraded through forks or they can get upgraded through improvement protocols, which gets voted on off the network. So that's where the issue of the governance token comes in. That's why you can have all these different cryptocurrency projects offer um, tokens and not be labeled as security because they are governance tokens. They're not tokens to be issued as an investment. They're tokens to be issued as a utility to have a voting power on the network. Now, that's in a perfect world. That's kind of how it works, or that's how the blockchain would work. But the only thing that's preventing we're finding the hardest issue is getting regulators on board with this. So it's going to be a long project. It's not something that's going to come out anytime soon, but it's definitely something that we've started with.
Yeah, that's fantastic. I think we can wrap it up there. But Ty, I want to thank you for coming on.
Likewise,
And
thank you for having me.
yeah, I think we learned a lot. And I wanted to know, where can we find you if people have questions for you, or maybe they want to get involved in your decentralized stock exchange project. Um, there, you're on Instagram, I know, Twitter.
Yes, so you can find me on most places as Ty Cooper AOW, except Instagram because my original Instagram had got deleted for some odd reason and I can't get the username back. So you can find me on there as Mr. Crypto Priest.
Mr.
Online.
Crypto Priest on Instagram,
Yes. And
and Ty Cooper AOW
everywhere else, yeah.
everywhere
You can
else,
just Google
Twitter.
Ty Cooper AOW, you find me, Reddit, Twitter, DeviantArt. I used to do DeviantArt sometimes. Just a whole bunch of random apps. You can find me on there.
Awesome. Yeah, and if you're interested in tech and savvy, you can also find us. You can go to tech, the letter N, savvy.com. You'll find links there to our Instagram, Twitter, and YouTube. And yeah, I think that's all we have. So see you next time.
All right, see you. Bye.